See, money is a division of what you need and what you want. Till the time you don't get a sense of fulfilling your needs first, you will never be a good money manager.
Twitter bio reads travel, wildlife, music, movies, friends, along with sad equity seller.
Dal chawal were okay if you aligned your life to dal chawal. I have had bosses asking me, "अरे वो कर रही है, तू क्यों नहीं कर पाएगा?" And I have no qualms in admitting वो कर पाएगी, मैं नहीं कर पाऊँ.
How do you become the sad equity seller and yet live such a wholesome life?
It is incredibly fascinating how Warren Buffett and John Bogle manage money in the opposite direction.
For someone who manages 2 lakh crores and someone who's got a personality which is very vivacious,
In a world of consumption,
how do you draw this balance?
slowly but surely, the bag that you carry will define your status.
In your opinion, what is the difference in strategy that you notice very obviously between an ultra HNI and HNI, I would say?
Huge difference. It's all the behavior and the psychology of it.
In this episode, we talk to Swarup Mohanty of Mirae Asset AMC. He talks to us about the Korean philosophy of managing wealth, India's young investors, asset allocation in a high valuation world, and also talks to us about how global collaboration shaped his approach. Swarup, I think this is the first time I have spoken to you. In the last 5 minutes, have I think given us an insight into your very, very larger than life personality. But I'm going to go with what's scripted.
Okay.
And the first question goes that your Twitter bio reads travel, wildlife, music, movies, friends, along with sad equity seller. For someone who manages 2 lakh crores and someone who's got a personality which is very vivacious, how do you draw this balance? How do you become the sad equity seller and yet live such a wholesome life?
A sad equity seller comes from a very deep-rooted anguish because you've been trying to tell people for the last 20, 25 years something and people don't listen to you. Then what do you say? You kind of accept the fact that there is that much people will listen to you and try to work harder because it's a growth asset. And people after 20 years have seen what we guys have been talking about. And even now, the convergence to that status class is not anywhere what it should be, right? That's why I hope before I retire, and I've got another 5-10 years to go, that statement should change because we're seeing a glimmer of hope on that one, right? And the second part is there is a lot beyond your basic work life, so try to build a good balance on both sides. And then that's what keeps you going. And if you don't have interest in life, then you're a robot, right? So try to do justice to what all you like. We've grown up like that. So try to have some fun outside. We have a lot of fun at work too, but if you enjoy something, then the outcome is always better.
So, do you consciously manage work life balance or life is work?
Both sides, I think, if I didn't enjoy my work, I won't be working. I won't be doing this. I'm very clear about that. Luckily for me, by default, I didn't have any inkling of this would be being the career. But luckily, I really enjoy what I'm doing. It's a fiduciary responsibility. The fact that we enjoy the trust of somebody else's hard-earned money is a big kick in life, right? And you aspire to polish that every day. So you come to office to polish that every day. So by virtue of that, though I might retire at a certain age from the job, but I'll continue to be connected in this work in some way or the other. Definitely not from an earning perspective, but you try to give back to this. There's so much to do on this. Yeah.
It's amazing you say that. We spoke to Nilesh as well, and he said the same thing. It's about creating wealth is one thing, but helping other people create wealth in a funny way has a very fulfilling feeling. How did this happen to you? How did money managing happen to you? And not at an average level, right? I mean, you are in a position of leadership and significance.
No, I think extremely blessed to be sitting where I'm sitting. But I think many of us who grew up in an India where liberalization happened in the mid-80s, some of us thought that we should have a career which is not the traditional one. So I come from Odisha, where the traditional ones are, I mean, top down, you
Yeah.
aspire to be a civil servant as the number one career aspiration. Then you have the engineering, the doctors, and a lot of bankers, public sector bankers from our state. But beyond that, there was nothing much. But when I told and both my parents are professors in science who've taught in the college that I was in, and when I said that I wanted to do commerce, because you could see the winds of change in India, and then somehow the thought that that's where India was going, so why not sit there, kind of played out on a hindsight. But that the country was changing was a big attraction, and then one led to the other, and slowly. I don't think you plan this career at that point of time. There was not that much information available like it is now, but I'm lucky that it's come this way.
You know, you work with Korean partners who have very different set of values, lifestyle, aspirations in many ways, right? Would you say that investment principles broadly remain the same across human beings? Or do you feel like because of different geographies, different sort of stories that they've come from, there is a stark difference between the two in terms of investments?
Coming to Korea, it's uncanny how similar we both countries are at a social level. It's the same family upbringing, same aspiration, job aspiration, education. It's the same. But people-wise, we are just the opposite. The Koreans are what I call yes, no, and we Indians are maybe.
Only great.
Right? हाँ 12 महीने हैं कुछ कर लेंगे, don't worry. We live in a lot of hope area. There's no hope in Korea. It's very absolute, and decisions are taken on the table, and I mean our chairman, Mr. Hyun Pak, once very interestingly told me that education-wise, Koreans are better than Indians because the education system is a little better. But you Indians are better at maths, so maybe you guys are better. But we Koreans will achieve more. I said, you are flip-flopping.
Yeah.
How? Please tell me what you want to say.
Yeah.
He said, you Indians are very emotional.
Oh.
You stay in yesterday. We Koreans, we destroy yesterday. That's why we achieve more. From that day, I too destroy yesterday. But when it comes to money, you see, money is a division of what you need and what you want. Till the time you don't get a sense of fulfilling your needs first, you will never be a good money manager for your own personal self. It is true that when you start earning money, you probably fulfill your aspirations first. Nothing wrong with that. But as long as you know that you are fulfilling aspirations and not doing your needs. So it's not a thin line, it's a very broad line which needs to be learned very early in life. So once one learns, then that is common across the world.
You want to explain that with an example? So
Yeah,
what
suppose
you mean?
I'll tell you.
Yeah.
My biggest expenditure. I don't. It's my life.
We're not judging you.
Don't judge. Yes, that
Yeah.
was the right word. My biggest expenditure is my music system.
Okay.
Okay, but that is aspirational.
Yeah.
Right. So because I'm in this area of money, when I didn't have a bed, I had a very good music system. I can show you photographs on that. It's very funny photograph with a blanket at the floor and two large speakers on
you're
both
married?
sides. Yeah, but thankfully my wife understands that, so it's okay. But very early I realized that the aspirational system can come after a certain space. Between my wife and because a lot changed after the son was born. Somehow the responsibility changed. I don't know what switch came on, but the day he was born, after that I started investing seriously. Is a fact. Is a fact. Before that, it was very frivolous market timing and all that. We go through that. But once you get that realization, then between my wife and I, we as a family thought of a threshold of a safety net.
Yes.
And a lot of the larger same thing we did after we crossed the safety net. Suppose, simple example, we love travel.
Right.
Before the safety net, the way we traveled and the way we travel now are two different ways of traveling. Maybe a slightly better room comes now.
Yeah.
But it's not that we didn't travel. But the budgets were completely different. And that's helped me actually. I'm not a car guy, so I'm not a big expenditure there. But post that safety net, the music system that I have now can give a lot of large cars a run for the money.
Yeah.
But that's my life, my
You
money.
choose it.
But the fact that we could push it to beyond the safety net is something which has helped me.
I think there's something else that sort of may or may not play havoc with Indians is keeping up with society, keeping up with your friends. And you alluded to that. You said pick an IB school only when you can afford it.
See, actually, I come. The small towns are this,
Yes.
and you live your life more for your neighbor than
Yes, exactly.
yourself. But thankfully, I should have come to Mumbai earlier, where Mumbai I think is the least
Yeah.
of this. But I came to Mumbai via Delhi.
Oh.
So every city has its own, nothing right, nothing wrong.
Yeah.
But the sooner you get out of it, better. But I think societies are changing. The young don't believe in this as much.
That's true.
They are extremely, in their language, very chilled out.
Yeah.
And I love the way that chilling out happens within them. So I don't think they judge each other on money at all. My son's 26. I see this group of them. They're oblivious of so many things which used to hit us.
Yeah.
And that has kept this country back, actually. I feel, the biggest thing that has kept this country back, if you ask me, is his lack of dignity of labor. The moment you uphold dignity of labor, every work is work. If you go to the European countries, we treat everybody, they treat everybody equal. And that is why they achieve so much, right?
Yeah.
You go to Japan, you go to Korea.
Yeah.
The respect that they have for each worker at a bow level is something which struck me. I saw that even more in Japan, right? And that is why those societies, those economies are so very different.
They evolved.
Here, we are differentiated by the
Class.
work we do.
And class.
Yes, that then evolves
Yeah,
to
I
the
mean,
class.
our last names, whatever it's worth,
Correct.
carries what we did for a
I
living.
can do a 2-day session on that.
Yeah.
So let me
We should do it.
Yes. But sooner you banish all this, the society then evolves in a very different way. Two things. You banish dignity or uphold dignity of labor, and you let the women express themselves. Every society changes, and I see that happening in the next generation. Didn't happen in mine.
No.
But when I see the young, I see a lot of changes there, and so I feel the next 20, 30 years, this country may not have any correlation to the journey it's had till date.
Yeah, hopefully.
Yeah.
Swarup, it's amazing you bring this up because one of the pillars of Waterfield also is, having women be independent. And this is not to go out and even earn a living, but also to be actively involved in managing money. Because as data has it, women outlive, or wives outlive
So
the
happy
men
you
they're
said that.
married to, right? Talk about your own experience. How actively involved is your wife in your money or in the two of your money? And why is it so important to involve women early on, either as children, either as your spouse, or either as inheritors?
See, I've tracked Waterfield. I've tracked Soumya all her
Yeah.
life, and I'm a big fan. I was just discussing her before how I'm okay taking stage with anybody excepting her because she brings this very, what can I say, very, I'm not getting the right word, but the aura around
Yeah,
her
the
is
energy.
so sublime,
Yeah.
and her entire diction and her thought on money management is out there, and it's as if it's rehearsed, but it's not rehearsed. It comes out very naturally, just speaks of how deep rooted it is
Yeah.
in her, and that's reflecting on the
Yeah.
organization. And like I said, everything starts with the woman. I can talk about the journey of women across the world,
Yeah.
across societies, and it will invariably reflect on their final outcome as a country,
Yeah.
right? So, and then you hit it absolutely when you said that data says that 80% of married women live longer than men.
Yeah.
So we're the lucky ones, we'll leave.
You'll bounce quickly.
But you're going to stay, and at that point of time, your only friend is money. There's nothing. Rest be damned. Only friend is money. So the amount of money women will need is far superior than or more than
the men.
women. And they are better money managers.
You're right.
Right? Imagine if the home budget were managed by the dad. What would happen? So it's not that they don't know how to manage money, but I would say over the years they have not been allowed to manage.
Yes.
Right? But that is fast changing. If you see, the number of women which is just entering an earning domain is just increasing by the day. I'll give you a data. Uh, uh, 8 years ago or 9 years ago, Mirae asset was 6% women. Now we are
Oh.
38.
Oh, wow.
And trust me when I say this, and I'll vouch for my employment system, we go in to hire the best candidate. That means over the last 8 years consistently, the better candidate have been more women than men. 38 is fair amount. So once that happens and they start earning, I think money management will also follow suit. Unfortunately, still a lot of working women depend on the men, and that's where things need to change. I'm so happy that people like you are urging them to become, because if they don't, then there are genuine issues. I don't think people realize the need or the acute need for money during that age. And then apart from them living post their husband, they're going to live longer. So imagine we used to have this 30 concept, 30 years of working and 30 years of living. Now it could be 30 plus 40. And those 10 years is when you're not physically your best. So your health and the wealth now become very critical. If you don't have the health, then you'll need more wealth. Right?
That's what somebody said, right? Nobody ever gives you a loan for retirement.
Not at all. Not at all.
It's the only guaranteed goal which you'll never get funded for, right? And I think in that same breath, what a lot of us should take pride in as women is women are phenomenal at multitasking. They can be a great parent, they can run the home, and of course go to work, which I don't know how many men can do. It's not a man-to-man conversation, but just putting it out there.
See, I have grown up in my professional life accepting defeat to my colleague women workers on physical labor.
Really?
Okay. I have had bosses asking me, "अरे वो कर रही है, तू क्यों नहीं कर पाएगा?" And I have no qualms in admitting, वो कर पाएगी, मैं नहीं कर पाऊँगा. Okay, so I've been lucky to have been, and they're doing some incredible women colleagues I've had in my life. So they've taught me from my English to taking out my jewelry, because we come from the East, to how we should present ourselves, to working hard. Is phenomenal, and I've been blessed from that account, and hence the person sitting in front of you today is a very different person from the one which started working, right? And I say this, you get in women to the workforce, you see the change in etiquette of any workplace, right? But when you come to that, the knack is there. The kind of stuff they can do, imagine. And I witnessed, I didn't know, I'm being honest with you. I witnessed that during COVID, where there was a basic expectation that the lady had to do the housework as well as work. And that I don't think
with a
is
child
fair.
Crying in the background.
Yes. So we were okay with children sitting during our Zoom meetings. It was just fantastic to go through that phase. But, that part, that realization should come to women first. Once that realization, yes, they are multitaskers, yes, they are super women, a lot can change. I think somewhere that realization, pardon me for the honesty, can be a little better.
No, but it's people like you that are making the right noise. You're in a position of impact. And if you say this, it means so much more, right? When women say it, I mean, it's like, you're pushing yourself out there, but it's good that, you believe in this and you say this out loud.
Since you asked that question, in my family, we've divided work.
Roles.
Money somehow.
It comes on you.
Yeah. But let me tell you, my son, my wife and I know each other's money. Right? And it's very important that, and this is what I learned from my parents, that once you're transparent about money, the other person also upgrades the skill to understand money. So though I might be the decision maker, but the portfolios are completely different.
Okay.
My wife's portfolio is as per her risk profile.
Okay.
My son's portfolio is completely different to
both of you.
Somehow I'd really like it if he took more interest. And the other day somebody asked him, and he has this very different sense of humor. What does your dad do with your money? And he said, my dad spends all my money in investment. Okay.
That's funny. Yeah.
So he has that
Yeah.
sense, but we know each other's money, so it's kind of educating our own self. So over the years, the portfolios have changed according to
Your
the risk-taking
objectives.
profile.
Do you manage your own money?
I have, but some part is managed outside.
You should be working with us.
Why not?
I'm gonna cheekily just slip that in. But talk to me about investing, and I want to talk to you about how, for Waterfield, and you alluded to this as well, our fiduciary responsibility sits with the client, right? We take pride in saying that we are conflict free and aligned to the families that we work with. How important do you think this is for wealth creation? Because the Indian financial services sector, very similar to the rest of Asia, is very product driven.
Yep.
And I want you to share with us why that may not be the best way to create wealth.
See, there in our line, no, there is only one rule. What is right for the client is right for us. And that is what we are
Yeah.
reflecting on. The client's need, we define as, let's define it as a goal.
Yeah.
That's the most important thing
Yes.
from a client's perspective.
Yes.
And the person who takes the client, I mean, I would say the goal as the star of the person's life. And the person who takes that client to that goal
Achieve.
is the rock star.
Yeah.
So that is why the need for a good advisor on the money is sometimes more important than a doctor.
Wow.
Okay, why do I say this? Because, I'll ask you a simple question. What is more important to you, health or wealth?
Health.
You will say health, in your mind is wealth.
Thinking, correct.
Right? So that's where we sit. Okay,
Yeah.
it is, you can actually be unhealthy for a long period of time and still live. If you don't have money, you can't live.
Yeah.
Think about it sometime. And our job as safeguard of that money cannot be bigger.
Yeah.
And I always believe it's not about, our job is not about taking somebody to the goal or something. Our job, and we're blessed to be, is collecting wishes. Right? I mean, at that point of time when a person needs money, if the call comes and we can give that money, think
You're
of the
blessed.
good wishes we get.
Yeah.
Okay.
किसकी तो दुआ लग रही है.
दुआ एंटने का बिजनेस है.
हाँ.
Right? Think about it. So जब वो जाएंगे हमें दुआ देके जाएंगे.
100%.
और जब हम जाएंगे
उनकी दुआ लेके जाएंगे.
हाँ, और क्या चाहिए लाइफ में, right? So that's where we sit, and people who realize that then will cater to the client's need. The products are a means to that. As a product manufacturer, if somebody wants to make us a hero, I will be a hero, but I am not the hero. I am just a pass-through to that. And then I always say this, that from our perspective, people who manage people's portfolios will only go that much. People who manage other person's life will be together for life. So product management is a very basic way of approaching this. If one has to evolve and get to actually providing solutions to your client, then you have to understand the client, because every client's need is very different.
Yeah. Swarup, early this year, you mentioned that 2025 was going to be a year of accumulation. We are 9 months into the year and we are flat.
Correct.
In fact, we've underperformed every market in the world, including an asset class like gold and silver. We have a few more months to go before the year comes to an end. There are some who might have missed the boat. But as we look ahead now, what is it that you are anticipating with Indian equities, and what is it that investors should do? Because I think what has also happened is, while we've counted the number of SIPs that have come in, what we've not counted is the number of numbers that have actually paused allocation, just with simply being bogged down by fear. What should investors do?
Actually, the reason behind saying that was very simple. If you look at last year, and please understand, when you go back to the second half of last year, we were coming off a brash 3 to 4 years one-way
journey
path to the markets, right? Which was backed by a very low base of COVID. Everything went the right way for the country, but a lot of things came together towards the end of last year. We did have an urban slowdown, natural, because how many cars will somebody buy, right? It was also backed by our growth coming down. I think what we got surprised as a house was corporate results didn't aspire
Keep
well.
up.
I think
Yeah.
that was the only surprise pack which came. Probably it's a culmination
Yeah. Yeah.
of
Everything
growth
that is.
coming down. Suddenly there's a slowdown, and the FIs went out. As a result, the market did show a definite change in direction. And from our perspective, we didn't see any change to any of that data point. What we thought that, because the monsoons were good for 2 years, we had anticipated a rural comeback.
Which.
But somehow that also didn't come back. So our statement of nothing happening even became bolder. That's the only place we got surprised.
Yeah.
But what we are sitting now
Yeah.
is a very interesting moment. Yes, it's up to the policymakers to come and do their own thing. I think the GST is a
Cut,
big,
yeah.
big boost to
Yeah.
what can happen. Now, from an investor perspective, let me tell you something, is that when data points are right for the market,
Yeah.
the market is never right for the investor. See, there is secular realization that India is the growth story of the world.
Yeah.
Even if we are saying growth has come down a bit, we are 6 to 7% growth, right?
Relative.
The world is not growing more than 1.5 2%.
Yeah.
This is the growth country of the world, and sooner or later, once things kind of subside, and things do subside, whether it's war, now we are living within wars around us, and life continues. Say some US data points are hitting us, say tariffs. But now we are getting used to the tariff thing. So as things start getting elongated, people start getting used to it, and life goes on. When life goes on, markets take a very different perspective. So the opportunity an investor has is between now and when it starts going. That is why we had termed this year as the year of accumulation. Now, if you think tomorrow it's going to turn and you can buy today, be my guest. Not an issue. Then you are either God or a magician. Both exist. So it's up to you. But the same thing would be, see, what does a fund manager aspire to do? Every fund manager you need will tell you that he or she aspires to buy a good asset as a good price. There is no doubt or debate that India is a good asset. Right? The price is good. This is when you have to buy. What is price? Where is the place where the buyer and seller meet. Now, say because of the FIs are not there, there are less buyers.
Opportunity.
So the price is good. When all the buyers come in, the price will not be good for the investor, right? And since they come in with big monies, their approach to the same price is very different from our approach. If you don't accumulate this phase, the risks start piling up against you, right? And that's been our advice for last year. But because of GST now coming in, the government is creating a demand. The RBI is also supportive. We will hopefully see the beginning of what can be a production comeback, right? And please understand the pay commission will also hit next year. There will be money in people's hands. The question is, what will they do with the money? At this moment, every Indian is kind of catering to aspirations more than the need. So this could be the push for corporate results is what we kind of anticipate. Yes, the trigger that we were hoping for is beginning to show. And hopefully with 3 years good monsoon, it would mean inflation will be unchecked, because broad part of our CPI is food, and hence we are in good hands. The RBI is holding it well, the interest rates. We could see some more easing out there, coming. Meaning my EMIs can become a little more cheaper, and hence I will have more money. And now, when you have that money, please buy this asset.
And don't trade the asset.
But the other learning, which is more important, is that the fact that gold has done so well. And many of us, I just tweeted today, do you think time has come to stop calling it a hedge?
I completely agree with that statement.
So, because the realization over the last 3-4 years is that
it's become a risk asset.
Multi-asset structures are better than one asset structure. That was mostly between equity and debt. It is time we make commodities, either gold or silver, and an important part of our portfolio.
So now we call it equity and non-equity,
Fair enough.
which
Fair enough.
probably is the erstwhile debt
Right,
is
yes,
now
yes,
non-equity.
yes.
So I think fair assumption that the next few months there is still that window for
Yes, it's
opportunity
still in the
open,
investor
right?
side. Yes, I
Okay.
would put it right.
So I think if you haven't started already, you've got to do it
Yeah, you
now.
still have
You
time.
don't want to miss that opportunity. Talking about what we do as advisors is our focus is on the portfolio outcome, right? Risk-adjusted returns.
Correct.
Now, whether it comes from gold, year to date, it's come from silver for a lot of our
Right.
clients. A lot of it has come from InvITs, REITs. So that's how we
True,
build portfolios. It's not usually a line item, right? But if I had to ask you, with most part of this year down, if you're looking ahead the next 3 to 5 years, how would you recommend or how would you build your portfolio across assets?
See, at a portfolio level, a lot of things have changed for me in the
Okay.
last 3, 4 years because the underlying has changed.
Values
Right.
have gone up and down.
No, from a structure of the market,
Okay.
what we call the democratization of the market.
Okay.
If you look at the last 2, 3 years, India has been surprisingly one of the largest public issuance countries of the world.
Yeah.
Right?
I mean, yeah.
Last year was the largest in the world. Right?
You look at countries like England, you get one listing
Correct.
every few months or a year.
Yeah, and what is happening from that listing perspective is that most of the listing is the mid and small segment.
Yes.
Right. So if you have to catch the length and breadth of the market through your portfolio, your allocation to mid and small probably has to go a little higher than what is due according to your risk profile. But if you have to hold the market, then the broader part of the market, that allocation has to change as per what I say, as per what I believe. So I was more a large cap person, large and mid person.
Now you're looking.
But I don't have a choice but to add some small. My portfolio return is not some extravagant.
No.
My portfolio return expectation is 11 to 12%.
Yeah.
I run that on my goal, and I think I will achieve my goal on the 12% return. But even if I have to drive that, I feel I have to reallocate that a little bit more towards mid and small. That's my opinion, my personal opinion. So structurally, that has to change.
Yeah.
Right.
Yeah.
Second part, the emergence of, like you said, gold and silver. The biggest problem was, yes, our call on gold was very strong, but sometimes inaction at a portfolio level.
And sizing the bet.
Yeah, no, I was okay on, when I was speaking something, but that was not getting implemented.
Translated.
That cannot happen.
Yeah, yeah.
So those are two things that I would like to change at a portfolio level. But if your clients are getting through InvITs and REITs, I think that's something which is a reality in India. That market has got beginning to get very structured.
And the regulator is also pushing for it in so many ways.
And I think it is very important for an investor to take the rightful advice in that.
Yeah.
Because what people like you can bring to the investor cannot get on his or her own.
Yeah.
One is the due diligence that you would do at the back end.
Yeah.
Plus, the selfish arrangement between, say, the provider and you will be superior to that with an individual client. Is a reality. So always play those games through an advice route. Like suppose we're launching, say the industry is launching the SIF.
Yes.
I urge every investor at the inception stage, it should be an advice product. Yeah. Completely. I would, because the regulatory is there, I'm not allowed to say this,
much about it. Yeah.
It is true that at the beginning of this new risk profile, an investor necessarily has to take the advisor.
Advice of an advisor. Swarup, and I'm very glad you brought this up because, we talk to a lot of clients or prospect clients where the expectation and the ask is 18%, 20%, 22%. And for some reason, product manufacturers in some ways or advisors have shown them that, right? You alluded to 11, 12%.
Yeah.
And this is what I want you to talk to our viewers about. That, the ask of a 12, 13% risk-adjusted return is not a given. It requires a little bit of managing, a little bit of reviewing, a little bit of chipping off on the edges. Yeah. And just like in the US, getting S&P returns is a challenge. So is it in India. It's not as if 20% returns are obvious.
I think when we start this journey, we think it's a return generating journey.
Yes.
As we mature, we realize that it's a risk mitigating journey.
Matlab, yeah.
And I think, this is a personal opinion, I'm not being judgmental at all. But the power of 12 to 13% compounding over 15, 20 years is
It's
highly underrated.
phenomenal.
Highly underrated.
Yeah.
I would rather the person actually comes and tells you that I need this kind of money in this many years, and do the calculation. Whether the
Backward.
calculation 18% or 15% or 12%, do the calculation.
And then build your
Then
asset
build your asset.
allocation.
Because that 18% standalone has no meaning.
Hmm.
People come and tell us that, I need to, why are you here? I need to create wealth. Fine. What is that wealth?
Quantify it.
Put it down. And then somebody will say, okay, I need best returns. Okay, put that return. What it does two things. One, once the return comes out,
Hmm.
whether I actually come to a mutual fund or stock market, or it is not feasible by 2 and you try your luck in Mahalakshmi racecourse, becomes very clear.
Yeah,
Okay,
yeah,
once you know something is achievable or not achievable.
yeah.
Sometimes goals are not achievable. Then you come to know this is the money I have and I'm
Hmm.
aspiring something which is beyond. Then
Mismatch.
the risk has to go up.
Yeah.
Till you don't put, if you don't know why you are investing, no, it is not possible to know where to invest.
So the why has to be addressed
Why
first.
is everybody's why is different, huh?
Yeah,
Your why
yeah,
and my why.
yeah.
Like somebody will laugh, why a music system? But that's my why. It
That's your
gives me
why.
pleasure.
Yeah, yeah,
It's my life, right?
yeah. Swarup, you talked about public issuances, and I want to talk to you about the growth pool, like we call it at Waterfield, right? We talk about how some part of your allocation could be put away into the unlisted world, or venture credit or venture debt, or private equity. Of course, we also say that this is delayed gratification.
Correct.
It is illiquid. We will promise you the sun, moon, and stars, but the fact is you're going to play that long game here.
Right.
Do you feel like all of this is important in a portfolio, or do you feel like that dal chawal approach is okay to create wealth?
See, dal chawal were okay if you aligned your life to dal chawal.
हाँ,
Okay,
correct.
I'm perfectly fine. बट उसके साइड में भी लगता है धीरे धीरे
थोड़ा bells और whistles.
बहुत कुछ लगने लगेगा लाइफ में, राइट?
हाँ.
In a world of consumption, and I'm being judgmental when I say
Yes.
this, slowly but surely, the bag that you carry will define your status. Trust me on this one. And the bag is changing.
Yes.
Okay, for us men, it doesn't change that much,
Yeah.
but people's cars change.
Yeah.
Okay, earlier the car you would go and announce to the world, you'll probably hide in your garage today.
Hmm.
And that's how societies change. Lifestyle inflation is the bigger killer. So if you are happy having dal chal all your
Very good
life,
for
then
you.
it's brilliant. You're the only moksha
Yeah,
kind of
yeah,
person,
yeah.
but that's not reality. But here's my thing. When you look at some of these, I wouldn't say riskier products, but I would say evolved products, you have to evolve as an investor also.
Yes,
So
it's a journey.
here's where my personal learning of keeping that safety net intact.
Yeah.
And once you cross that safety net, you have to necessarily go higher up in the growth assets.
Yeah.
Right? And growth assets for you might be, suppose a lot of investors can be non-listed.
Yes.
Right? My wife taught me art, so I do a
Yes.
little bit of art.
Yeah.
And some of the artists are phenomenal. But all those I started post that safety net. If I lose my job today, Robert Kiyosaki has given me the best definition of wealth. Is that if you lose your job today, how many days you will survive is the amount of wealth you have. It's a time game. Suppose you timed it for 30 years and you live 10 years more.
Yeah.
That's where the whole thing.
Yeah.
So because that 30 years or 40 years is possible, you have to necessarily be in growth assets perpetually, some portion, irrespective of your risk profile, irrespective of retirement age or whatever stage in life you are in. Because suppose you live 10 years more, who doesn't want to?
Yeah. And yeah.
Right. And so I did not know the private side of the market, quite honestly, till we didn't do that business. And now that we run a very successful venture capital business, the acumen you need to even just figure out how that business will be 10, 20 years is very different from us public market guys on the mutual fund side, when most of the data is available, right? So, like the assessment of those products need a little bit of involvement from the advisory side, the investor also needs to evolve. It's not a return generating business at the initial
Yeah.
stage, but some of your businesses, when they start doing well, can actually gratify you with the kind of
Yeah.
return potential.
So, Mirae is probably the last among major fund houses to have launched a small cap fund. You want to tell me more about this strategy? Is it because there's more of an ask, or do you feel like the value
No, no,
that
no, no, no.
this.
We are a very simple fund house.
Acha.
Okay, we launch a fund when we have fund management capabilities.
Okay.
And if you track, and I used to be actually taken to task because I used to make this statement, because earlier there was this general belief, okay, your large cap is doing well, your mid cap is doing well, why are you not launching a small cap? I said, why should we launch a small cap? Have you seen our portfolios?
Yeah.
I said, why are you saying this? Have you seen any small cap in our portfolios? There's no meaning that large cap we're doing well, mid cap. It has no meaning that we'll do well. But to be fair to our team's thought process was, and this is before the listing, let me tell you. One, there are two sides to the story. One, we did not have the acumen, proper acumen.
So talent.
Talent, yes. We launched the fund because Varun joined us, and Varun's career is small cap.
So you didn't hire him for the fund; it just happened.
No,
He was hired.
We went looking for that acumen.
Okay, so you knew you wanted to.
Yeah. So see, and please bear with me. Say that this is the business side saying, we are creating a brand.
Yeah.
And a brand also needs downside protection.
You're right.
Right. Now, after 15, 16 years of managing money, we've gained some track record.
Yeah.
Where if we launch riskier products, people will be okay with it. And just honest with
yes,
you. Okay?
Yes.
If at the beginning of our story we launched, and by nature the product is volatile.
So
did we have the scope from investors to launch a downside product? I don't think we did.
Right. Yeah.
Right. So there is a time when every business can. What we can launch when? Probably a big guy can launch earlier.
Obviously, yeah.
Right. And slowly but surely it took time for the Indian mutual fund business to graduate from what used to be a good brand to what is a good product. Now it is a product driven business, and rightfully so. The brand of a mutual fund is derived from the product, not the other way around. Right. So today, and I'm so happy to be witnessing that. That's why I said there's a glimmer of hope on the sad equity seller. Because a good product, irrespective of the parentage, can create a ripple in the market.
Yeah.
That's the maturity. So now that we have the fund management, and just by the fund manager, nothing happens. You have to have the analyst back in.
It's the whole team.
Yes.
Team is success.
So now that we have the team, like we have the SIF approval.
But you've not found the right team.
No, we have. They're in the process of joining. Let them join in. If we want to just gather money, I could launch it today.
Yeah.
And being the first SIF, we will get money.
Absolutely.
But that's not how we approach the business.
Yeah. You want to stabilize and then, of course,
yes, taking the money is the easiest.
Managing the money is a challenge.
It's the business of building track record.
Yeah.
The day we are confident of building track record, we'll launch it.
Yeah. Swarup, you, of course, deal with investors across the board. Small town, big town, Bharat, India, retail investor, family office. In your opinion, what is the difference in strategy that you notice very obviously between an ultra HNI and maybe an HNI, I would say?
Very different.
Is there a difference?
A huge difference, let me tell you. It's all the behavior and the psychology and the approach. It is very interesting that at an ultra HNI level, you actually do not know why he or she is investing in some products.
Okay.
So I don't debate much with them on why they're investing.
Okay.
It could be a fancy thing for a coffee table discussion, for all you know. You can guide them for allocating that much, but you should not get into giving them gyan on why you're investing. Okay, it's their money, and
they know.
Created enough money to know, right? So you respect that, number one. Number two, at that category, the urge to conserve capital is also very high.
Wealth preservation.
Wealth preservation is also very high, and rightfully so.
Yes.
So the way you approach that category cannot be the way you approach, say, an HNI, who's still in that growth phase, wants to be an ultra HNI.
Yeah.
Right? And the other side, when you talk to retail investors who probably are unaware of how much money they will need at the end of
Yeah.
it, it's a very different approach. And then that's why it's called personal finance,
Correct.
right? It is personal.
Yeah.
So each to his or her own. But probably when you talk to the skills required, when you come to talk to the ultra HNIs, or the conversation can be very different from each
Yeah.
table.
Do you think ultra H? I mean, this is what obviously you would imagine, right? If you're an ultra HNI, the corpus of wealth that you have is obviously larger, so your risk taking ability improves. But if I flip this around, because the corpus of wealth at stake is so much larger and you're largely a custodian of wealth, do you think it's actually the other way around where a retail investor might have higher risk taking ability?
That's what I'm saying. Though they know risk, maybe the ultra HNI knows risk, so he's gone above that and said, "Okay, assessed it and say this much money is enough,
Huh.
and I need to preserve this much." They
Hmm.
know the downside.
Correct.
They're not, and they've evolved there.
Yeah.
So there you don't question their
Intent or objective.
because they know.
Yeah.
And
Yeah.
I'm a salary. Make no mistake, I'm a salaried
Yeah.
individual.
Yeah.
Okay,
Yeah.
I mean, how much do I know about
Yeah.
wealth? They will teach me better. I mean, we were doing this. Actually, Nilesh and I were doing
Yeah.
this show in one of the top end, most talked about residential complexes in Delhi, in Gurgaon.
Huh.
And it was wealth creation in capital markets. That was
Huh.
topic.
Huh. Huh.
I started saying, let us talk about capital markets. Wealth creation, I can't
Oh,
teach
you are telling me.
You will tell me.
Yeah.
But that's what it is. You have to respect them for what they are. Respect the fact that they have done their assessment of their money, and now they want to conserve it. But conserving money also is an art.
Yeah.
Right? Conserving that kind of money
Something else.
is also a skillful job.
Yeah.
Because their avenues of conserving might be very different
Then our
from my avenues.
definitions.
So definitions change. Hence, catering to those definitions is very important.
Yeah,
and
they're
more
probably
important to understand the psyche or the behavioral aspect of all these people is what makes our job so fascinating.
I mean, they look at probably golden visas to preserve wealth, while we look at fixed deposits.
I mean,
right?
I know somebody who goes outside the country to de-risk
Yeah.
his whole thing. Why not? And as a fact, if you see, a lot of family offices are now registered outside the country
For good reason.
So they have their reasons. You can't question them. They know.
They know their money better than we do. Well, two things I want to quickly bring your view on, and because you talked about it as well. How do you feel about gold and silver right now?
Yep.
And also, what are your thoughts on regional diversification?
Okay.
How important is a globally diversified portfolio to create wealth?
Both are questions of now.
Yes.
And I tell you what was wrong in whatever I stood for till now.
Yes.
If I would have said equity is a growth asset class, I would be right. My statement was equity is the only growth asset class. And that's where everything went wrong. On a 10-year horizon, when gold is outperforming equity, I feel everything that I've said is wrong, and hence I need to unlearn everything. So the question I'm asking is from a gold and silver perspective, because this global dynamism will continue.
Yes.
Right? In the first time, we have sovereign reserves now having more gold than the dollar, right?
Yeah.
While in 2008, Warren Buffett had simplified it for me, saying that the world will trade in dollars. So there was no doubt.
Forget that. You also have Bitcoin now to deal with.
Yeah, exactly. Right? So the world order is changing. We are probably in the midst of witnessing history, and we were fortunate to be sitting in these times because the order going forward might not have any correlation to what has happened now. So then doing merit to the prospects of both this become very important. I am beginning to firmly believe that they no longer can be treated as hedged assets. It is a very important part of your portfolio. I met somebody very senior from London, and the lady told me that the bulk of retirement money in Europe goes in multi-asset structures.
Really?
Bulk of 80%.
Wow.
Right. The probability of a multi-asset structure giving you median return is higher than one asset structure.
Obviously,
that's maths.
Yeah, diversified.
Over a 10, 15 years. So the merits of diversification you cannot take away. But again, since the order is changing, the diversification, the cliched statement that 10% to gold, I'm questioning that already.
Yeah.
Right? So that's one part where clearly, and each to his own, right? But you cannot just not be in gold, and the gold has to be digital
I
gold.
think the Indian housewives would be very happy when they hear this
Yes,
interview.
because
They're richer
no,
than most
I'm not saying
investors.
this. If you see this Dhanteras, the Gold Council advertised for gold ETF for the first time. They didn't advise
Physical
jewelry.
gold
No, they advised gold ETF. So, like I said, the order is
has changed. In fact, I
dramatically.
think, yeah, the order has changed.
Yeah. And taking nothing away from the India growth story, the fact that we are just 3% of
The world GDP.
world market cap
Yeah.
makes it necessary to own other economies. Not just economies, some of the businesses that are there outside, India will not have. So if you want to own, and people should aspire to own those businesses, then global diversification is a given.
It's key.
Given.
Right. Just a few more fun takes. I mean, this is how fun finance can get, right? Not very fun. But any books that you recommend our viewers to read? Anything on finance?
Yeah, I mean, see, it's very fascinating that, I grew up reading Warren Buffett.
Yeah.
And suddenly I met this gentleman called John Bogle on in print. And there is this book called Common Mistakes. You can just Bogle's book, I'm not getting. But it is incredibly fascinating how Warren Buffett and John Bogle manage money in the opposite direction from the same underlying and create wealth.
And
Both
different
are
principles.
Absolutely opposite principles. One is active, one is absolutely passive. When John Bogle starts writing his book saying that how can you give your long-term money to an active manager? You start thinking, what is he saying?
Yeah.
Then he says that the fund may not stay, but the index is permanent.
That's true.
Then you realize, where is he wrong?
Yeah.
So then starts this big fight. I dare an active manager to complete the book. It's one of my fascinating books.
Yeah.
But one other book which I really, which set the tone for my understanding is Passports to Profits by Mark Mobius.
Okay.
Because Mark Mobius is this phenomenal person who discovered countries before the information age. And I'll just take 1 minute because it's fascinating.
Yeah.
He says, and those days he had that aircraft where
he's in Thailand now, isn't he?
So he would go and discover countries and look at their thought process. He says the time taken from my aircraft to the cab outside defines the bureaucracy of the country. Think about it. Then he gets into the cab, and the first visit he takes a local cab by rule.
Yes.
Right? And he gets into the cab and he asks the cab driver, how's life?
Okay.
The answer of the cab driver will define the mood of the country. Okay. Then he checks into the hotel and he goes down to the nearest newspaper vendor and he asks, how's business? And the answer of that person will define the broad economy of the country. With these three answers, he sits with the government. I mean, look at how simplified they make it simple. And the depth of these. So such people fascinate you.
I've done a few interviews with Mark Mobius and he's interesting. And he never ages. That's the other thing with Mark.
I must tell you, we were in Delhi on a building and lift conked off on my bad luck day.
He walked the stairs.
He climbed 9 stairs and by the time I was half this age, and I was huffing and puffing. He's so fit.
And I think from what I remember, Mark, even a year ago was when I had done an interview with him and I was at NDTV Profit. Very constructive commodities. I don't know if you remember that.
Yes.
So he was always a big believer of gold. So
he's very ahead of his time.
Yeah, he is clearly ahead of his times. Best decision, and I'm going to make this, I'm not going to say investment even though that's written, but best decision you made personally or professionally?
Personally is, of course, getting married.
I knew that was going to come. So cliche.
The girl who I pursued. So thankfully that was good. And more important because she's HR. And trust me when I say this, she's a PhD holder and her PhD title says Burnout of Finance Professionals. So a lot of learnings come at home.
Yeah.
It's backed by data, not
really.
My answer for my wife, I'm backing it by data, not this. That part. And of course, being in this profession, and I think joining Mirae Asset has been life-changing for me. And I'm so happy that I'm given this freedom to work. And half the times, let me tell you, my colleagues do not know what I'm doing. But everybody believes कि कुछ कर रहा होगा.
सही तो कुछ कर रहा है.
And that's what drives you. Not many times, and I worked for 30 years now. to say this. You don't get the freedom to work, and absolutely blessed.
What would you like to be remembered as when you decide to hang your boots?
I trusted him.
Good guy.
Good or not, I do not know.
Trusted him.
I trusted him, that's all.
Right. One mistake that you made in this long career of
Oh, it
investing.
is going to take a long time.
Okay, give me two then.
That I didn't invest when I started working. I didn't start early.
Yeah.
As a result, the pressure on me is fairly large because yes, there is a lifestyle.
Life catches up, right?
Lifestyle expansion also has
Yeah.
happened. I'll be very honest on that. So the amount that I have to invest now is substantially higher than what I should if I had done that.
Okay, that's fair. But I mean, you'd imagine that as you've also matured, you've also made some bets that have played out really well for you, right?
Yeah, it has, but it would have been far easier.
Yeah.
Far easier.
Do you think retiring with significant wealth is a function of luck?
Yes.
It is.
Yes, it's always. I mean, you look at any great fund manager, you see all fund managers have stock picking ability.
Yes.
But if they're not there at the right time, doesn't work.
It all comes down to nasib.
Again, bulk of Warren Buffett's returns wouldn't have come if he started then. So yes, luck is a big factor, but luck backs the brave. Luck backs people who invest. Luck does not back people who sit on the fence.
Right. Well, thank you very much, Swarup. This was a very engaging and fun conversation.